is, quite frankly, well, I suppose in a bull market and a bear market, there's never any logic at the peak or at the trough. But there's no logic in the bank shares being pounded, yeah? These companies are at 7 dividend yields. You know, the money market rate's not going to be too far off 7 by the end of this year. But logic doesn't apply anymore, it looks like, in markets. And the banking shares have been pounded as if they were HBOS or Royal Bank of Scotland, as if our banks were like that. But as I said, it doesn't matter. A lot of other weakness as well. Old Mutual was down about 9%.
What was the reason there? Once again,
the same old story. You know, I mean, Old Mutual is either the opportunity of a lifetime or, you know, it's terminal. But once again, that pounded. And then Richmond was down about 6%. The resource shares were basically unchanged overall. Little bit down. Gold doing quite well, strongly, up about 3%. You know, Anglo American down 1.5%, Billiton flat. But the real weakness is on the back of the banking shares and the financials.
What did you make of the announcement out of Hyperop? Very little information, but it's always concerning when a CEO resigns.
It's never good news when a CEO sort of announces a resignation or a movement out like that without sort of almost preempting it a month or two, or, you know, beforehand, saying then it's a planned movement, it's a retirement, it's a, you know, we are going to get a replacement.
With what looks like no replacement.
Yeah, it's also, I mean, it's even worse news when it's not a replacement to come into, when people are still looking when someone resigns. I don't know whether there's any other story to it. It's not a company that's really watched much by the market, though.
Ferrochrome prices down 57%. Analysts were pretty surprised by that, by the sound of things, but it has been taken. I suppose
you've got to expect it, eh? And I suppose every single contract price, coal, iron ore, the whole lot are going to come down by 50% or more. I mean, that is just the state of the market at the moment. You know, 6 months ago, you couldn't supply enough. Now you can't give it away.
Internationally, the UK is struggling a little bit. Inflation numbers down as the worst since 1980.
Well, look, I can tell you the UK, of all the countries, of all the major countries, the UK is in the worst trouble. I mean, the pound is being hammered. They are in now recession, 2 quarters of negative growth. Their retail sales numbers that came out were actually better than what people thought, surprisingly enough. But their housing market is finished. I mean, in essence, their banking system is finished. It's nationalized. The government's debt levels are going to go through the roof. Now, the UK is probably the worst of the whole lot.
What did you make of our retail numbers coming out of the Retail Liaison Committee, down to 10.8% in December, according to them?
Yeah, but that's a year on year. I'm not entirely sure of the basis of the calculation, but we know the official numbers came out for November of -4. And if you look at the results that the trading updates that we've got from just about all the major retailers, it clearly and obviously so shows a slowdown, but not you know, an absolute catastrophe. So we'll see when the official numbers come down, but we know the environment's not good. But at least in South Africa we have a sound banking system, a government's finances that are sound, an economy that still works. We're not swamped by toxic loans and gearing, and we're going to get significantly lower interest rates this year. So our outlook is actually, the outlook for 2010 for South Africa is not bad at all. And yet the pure domestic shares, the banks, are just being pounded because of overseas sentiment.
The other side of the pond, though, General Electric down 44% for its earnings in the quarter.
Yeah, but I mean, I suppose you're still lucky to have earnings. I mean, you know, earnings falling 43% is a lot better than having no earnings whatsoever. But obviously, one of the reasons why the Dow's down about 2% today is the market's trying to look at that. I mean, General Electric is so huge, and it's virtually in everything, just about. But it looks as though we're going to touch the lows we saw in November again.